Today we're going to talk about BEN stock, BEN stock, which is known as Franklin Resource, also known as Franklin Templeton. Franklin Resource is a holding company which engages investment management under related services. It operates under distinct brands, numerous of them, and it provides management and related sources to retail, institution, and high net wealth investors in jurisdictions worldwide. It was founded in 1947 and is headquartered in California. Franklin basically is an asset management holding company. It also does pension plans, trust, and does with fixed income, multi-asset mutual funds. The firm invests in public equity, fixed income, and alternative markets. One thing that excites investors about BEN, Franklin Resource, also known as Franklin Templeton, listed under the ticker symbol BEN, is that they are on the Dividend Aristocrat list, which so happens to be about a little over 60 companies on there, such as IBM, Johnson & Johnson, Kimberly-Clark, Leg & Platt, 3M is also on there. Target is another one that's on the Dividend Aristocrats, just going through Aristocrat and myself. Anyway, in order to be a dividend aristocrat, you have to have increased their dividends consecutively for over 25 years. So, yeah, that means you would increase your dividends even through multiple rounds of bear and bull markets. So, there you go. Franklin Templeton has just announced an acquisition of Lexington Partners. Lexington was founded in 1994 and is one of the world's largest independent managers of secondary private equity and co-investment funds. It currently has 139 employees across 8 global offices and 1,000 plus investors in over 40 countries. Down here we also see in track record of generating strong returns. In the summary of financial impact, we have here is the purchase price of $1 billion to shareholders at closing cost and $700 million in cash over the next 3 years. Transaction retention pool up to $338 million in cash retention awards to be paid over approximately 5 years, subject to certain performance criteria. And Lexington's estimate revenue of $350 million this year, with an EBITDA of just at $150 million also in this year, which gives us an overview of the financial profile, long-term capital management, fee-driven revenues, and expected immediate EPS. Generate revenue of $350, transaction payments made over a 5-year period, and Franklin Templeton's cash investments closed expected to be in excess of $6 billion. Moving on to the stock price, ticker symbol BEN, Franklin Resource is currently trading about $31.74. Its 52-week low was $24.91 here, and 52-week high $38.27. 11 analysts covering this stock, with a bunch of bag of mixed results here. We got 7 of them on hold, with only 2 of them indicating more of a buy rating and 2 of them more indicating of a sell rating. Which brings us to ask the question, has been an attractive stock to be buying at the moment? Price to earnings ratio is trailing and forward are pretty much close with each other, with just slightly under 9. We also have profitability of net income of $1.83 billion, net margins at 21%, return on equity is 16%, and return on assets almost 8.5%. As I spoke earlier about Ben being a dividend aristocrat and on a dividend aristocrat list, let's go over to its dividend history. At the moment, it pays out 29 cents for every quarter. It pays 4 quarters. It has been paid in full all the quarters previous, so there's no gaps or missing payments in this, which gives us a total annual dividend of $1.16, which is a payout ratio, yield 3.66%. Another main factor about dividends, we want to know what is the payout ratio. And right now we're looking at a 32%. So there's still room for increases year after year, so they can stay on the dividend aristocrat list. And I've been paying for 41 years. So it's a pretty solid and safe dividend. Moving on to their cash flow financial statements, they have paid last year about $560 million, just slightly under that, which just coincides of a dividend increase as it has increased. And as we move on to their free cash flow statement, they got $1.15 billion from last year, so they are up a little over 160%, looks like. Moving on, we should look at their outstanding shares. Are they buying back shares or diluting shareholders? And according to this, they are buying back shares, because we're now down barely, but they are buying back as the numbers have decreased year over year. So that all looks positive. So they're not diluting shareholders, which now brings us to the technical analysis point of view and chart reading. Right now we saw where we have a gap up where it has definitely filled back up. So also our trend lines on our %K is in the oversold category and is starting to somewhat protrude back up into the 32% line. We have okay volume at the moment. So another thing to point out is we've broken through all 4 of our moving averages, the stock price has, and our 200-day has been riding lower of the 100-day since back of October of 2020. They do look like they're getting closer here to cross back over, which would be a sell indicator of possibly the stock dropping a little bit more. Is this a good buy? I would say so. You collect a little over 3.5% dividend. It's near its 52-week low with just a few dollars in difference. This is a dividend aristocrat, which has a pretty safe dividend going on. So yes. Though one thing to take note is February 1st is their next quarter announcement. Going back to the last 4 quarters, they have beat all 4 quarters, but you never know. Playing around with earnings, they could come out with massive good beats and the stock drops. You just never know. It could go either way. They could come in with bad news and the stock rallies. It's like a crapshoot, really, on betting around earnings. So you might wait till after earnings. Could the stock shoot up through it? It could. It could also drop. But who knows what's going to make that happen. But because it's so close, I try not to play the earnings. It's not very good to be buying stocks just on the earnings bet. Hey, thanks for watching Tomorrow Venture Investing. If you've not done so, hit the like button and subscribe. And also, if you like, leave a comment. Let me know if you enjoyed this video or not. According to the YouTube algorithm, they suggest you should watch this video next. And I want to take this time out to thank you. Thank you so much for watching all the way to the end. I appreciate it.